What's up? Cheers to you.
Cheers, Riley.
Welcome
see
to this is episode 3 of Educating You Everything Real Estate.
Good to be here.
That's pretty good.
Delicious.
My guest today is a good friend of mine, Scott Valins. He owns a mortgage company called Go Rascal. They're in many states, mostly in New York and California, correct?
Yeah.
And you are, correct me if I'm wrong here, you are the number one Scotsman's Guide real estate broker in the entire state of New York. Is
Mortgage broker.
Oh, sorry, mortgage broker. What did I say? Real estate?
Yeah. You wear two hats.
I wear two hats. That's why. Let's try that again. You are the number one Scotsman's Guide, which is a very well-known publication for rankings, right?
There are a lot more than that, but
Yeah.
they've gotten their reputation
Got it.
and all their popularity from rankings.
Yeah.
Yeah.
So no one is better than you in the whole
No one.
state of New York.
Not even close.
Great.
It's not,
So tell us about.
I'm the only one there.
Tell me about Go Rascal. Maybe what is, for myself, I'm obviously, I'm a much smaller shop. I have one or two guys myself, but how many brokers do you have working for you?
I think we just eclipsed 60 LOs.
Wow.
Mm-hmm.
That's a lot.
Yeah, it's a lot.
That's
Definitely.
huge.
We're just getting started.
Yeah. And you're not like, you kind of I know you started as a loan originator, but you're now more in the, I guess, what could you say, the C-suite or the executive side, like maybe overseeing something. You're not in the ditches taking loan applications as much as you now are kind of overseeing everything, right?
I'm not. I'm actually pretty active in originating now again. I wouldn't say I took a break from it, but my model for a while was to spread out my volume to other guys that I was helping groom and grow my company. And I found like a little bit more of a comfortable balance where I'll spend a couple hours a day originating. I have a great loan officer assistant, kind of runs with my files. So I'll take the top of the funnel. I'll talk to the lead and do a joint call and then kind of hand them off. Try to do 2-3 hours a day, that max. Spend the other, 6-7 on growth.
Making sure the company's running the way it's supposed to.
Yep.
Yep. Tell me, how did you get, obviously you went to college, and then how did you get into mortgages? Like,
it's a great question.
My story is crazy, but yours is, tell me how you went from, I'm sure you didn't grow up saying I'm going to be a mortgage broker. Who does?
Yeah.
Right.
I actually think more people should.
Yes.
It's a great business.
Sure.
It's like a best kept secret kind of thing. I was living in LA here, here in HQ. After college, I think it was 21 or 22. I'd gone to school in upstate New York, moved back to New York City. Moved to New York City with all my college friends. I grew up in Florida. I woke up maybe a year after college. I was like, all right, I think I'm done with the cold weather. I went to school up to Cornell in Ithaca, New York. So 4 years in like frozen tundra, year in the city. I'm like, I'm ready for a change.
But are you from here?
I'm from Florida.
Oh, you're from Florida.
From
Got
Tampa.
It. Okay.
And I didn't want to go back to Tampa. I love the big city energy. And my cousin, who I'm close with, was living here. So I packed up, moved to LA, was doing odd production jobs for a couple of years from like 02 to 03 or 02 to 03.
TV and film production?
TV and film, yeah.
Nice.
I started as like a production assistant.
Sure.
Working on set, mostly music videos and commercials. Short,
Really?
3-4 day shoots.
Anything cool?
No.
Like you worked on Madonna's video or
No.
nothing like that?
No, these were, I don't know. These were like B-team kind of shoots. All I remember, frankly, I don't even remember the town, but I remember shooting so many things in that little like cove in Malibu that if you've been there,
Paradise Cove
with the rocks in the back.
Sure. Point Doom and
once
Paradise
you know
Cove,
it, every fifth commercial is shot there.
Sure, pretty much.
So I think if maybe there was a Cher music video, it's coming to mind. I could be totally wrong. For a moment, I was like, all right, maybe I'll like make a career in this. And I think I was a production coordinator for a hot minute.
Okay.
Got promoted. Wasn't doing coffee runs and whatnot. And then, I was just kind of riding that out. I was 22. I don't think I really had a care in the world. I probably did. And probably was like, what am I doing with my life? But it was fun. And I got introduced to a couple guys in the mortgage business by my cousin. Doing well, driving nice cars.
You introduced what? They're just like, hey, these are friends of mine. They do mortgages.
We were out, like socially.
Yeah. Okay, got it.
I know those guys. What's up? This is my cousin Scott. What do you guys do? Blah, blah, blah. We're in the mortgage business.
Of course.
You should come in for an interview.
What
come
year
check
is
it
this,
out.
Though? This is
04.
This is okay, got it.
Early
okay.
04.
Yeah.
Went in, interviewed, and they're like, you should come do this job. You're going to start with a lead book, and a list and a pen and a dial pad phone.
Yes.
Maybe a headset.
Yeah.
Probably not though.
Yeah.
Probably just one of those
Sure.
neck things.
Yeah.
And it was ripe for refinances then.
Sure.
Right. 2004 rates were coming down after 9/11, and then I think there was like a post 9/11 post .com recession.
Sure.
Rates were coming down. Had some fun there. Stayed there for a year. Realized it was not the right shop for me.
Mm-hmm.
And I went and got my broker's license right away on my own. Got my mortgage broker license. Set up shop in Venice.
Okay.
And brought on a few people. But this was, so I started there in October of 2004. I probably stayed there till very early 2006, like a year and change. Sure. I think I had a year before, everything came crashing
But you're
down.
right. I mean, 06, 07, like 05, 06, 07, those
are good years.
Yeah, those are huge years for mortgages. Like,
those were good years.
Yeah.
I actually personally didn't have like such great years. I was still getting, at that first year and change, I got my feet wet and I learned the business, but it was a waste. I didn't have any like client database. I was doing refis.
Yeah.
So I kind of started from scratch when I went and set up my own shop. And I only had a year before, so I started to get things going, had some clients, referrals and whatnot, but I didn't have like banner years. And then it kind of all came to a halt.
Sure.
Middle of 2007 kind of. And
so before the crash, you were running a small shop in Venice.
That's right.
Couple guys. What was the name of the company at that point?
Endicott Place Mortgage.
Endicott?
Endicott.
What does that
It's
mean?
the street I grew up on in Florida.
Really? Endicott
Place.
Endicott Place Mortgage. Wow.
Yeah.
I didn't know that. That's interesting.
Endicott Place Mortgage.
Yeah. Okay.
It's like, what am I going to name this thing?
Did you have a logo?
No offense to Clear Capital or First Funding and all those names, but as you'll see with my new company, like it needed to be personal, and I wasn't going for like the typical.
Sure.
So I was like, I'll pick up I love fond memories.
Look, if it's any consolation, my first company was called Apex Acquisition.
Yeah, sure. Okay.
Somebody told me it was smart that you should choose an A. That was important if your company started with an A, whatever, you showed up first in searches and all that.
And if your company starts with 2 A's.
2 A's, maybe double bonus. But
you don't even have to do anything.
Yes, I was marketing myself as like, the go-to guy for purchase loans and et cetera, et cetera.
But acquisition,
yes,
like
Apex Acquisition. Well, I was a mortgage.
So many words in these names are
because I was a mortgage broker and I'm a mortgage broker and a real estate broker. So I was trying to.
So you were doing real estate then as well.
I was doing
the acquisition. I get it.
So I was trying to position myself as I could help you buy your house and get you the mortgage at the same, which I still do.
Right.
But that's I guess that's the 20 late 20 something mindset of
right.
Apex Acquisition.
You felt so good about
You're
that.
Right. Prestige worldwide.
Riley Schmidt from Apex Acquisition.
I had a logo with an A, looked at a house. I don't know where that thing is.
The A with the house.
Yeah.
So original.
It was fantastic. I have that thing somewhere. I should bring that up. What was the logo for Endicott?
A house.
Yeah, there's just a
house.
It was a house.
Just I think I
random
went
house Google
I
image.
for sure paid $5. A Fiverr I don't think existed then, that app, but I think I paid $5.
Sure.
And it was it was just a house, probably to the left of the E.
Look, that's a good segue. How did you get? Because I think you could go right into because your company now. When I first met your company is called Scott Capital Group.
Correct.
I think, right.
Correct.
Which is a common thing to do. Capital Group or Scott Mortgage Investments or whatever. But how did you go from Scott Capital Group to Go Rascal?
Name-wise,
like where was?
Yeah.
What is the origin story of that?
Totally. So when I started Go Rascal, I really took a step back from scratch with my new business partner, and we're like, let's be intentional about everything. And I'm not saying that people who use Apex Acquisition aren't intentional with their name, but we're like, what do we want? Well, and we're very much all about like the counterculture. Like we're not going to wear a suit and tie to a meeting. We're kind of
sweater,
tie
shirt,
on top, board shorts on the bottom.
Okay, got it.
From Montauk to Malibu
is
our. It's not honestly. It's on our website.
I was gonna say, is that on the website? This says Montauk to Malibu.
So we stroked a pretty nice check.
I haven't seen that.
It's fresh.
No, I like it.
You would assume that I surf 5 mornings a week.
Yeah.
No,
but
not at all.
Do you surf at all?
When I go to Costa Rica, I surf.
Oh, okay. Fair enough.
I only surf in proper waves.
There you go. Fair enough.
I surf. My surf means I take lessons twice out of the week.
Mm-hmm.
So we said, let's come up with a funky different name. Let's look like a tech company, and let's look like a big company out of the gate.
Mm-hmm.
So Go Rascal, Go Daddy, riff on, something techy and fun and funky and different. We hired a branding agency, went through a whole exercise. They sit you down. It's basically like a psychological examination. They want to know like who you are, what you represent. Apparently there's like 13 archetypes in branding, and your company has to represent one. And they walk you through all of them, and they decide what archetype you are.
This is like some Madison Avenue, New York.
Oh yeah,
firm,
fully. They are based in Denver, but
okay.
Same process.
Yeah.
They show you all these color types and everything.
Can't be cheap.
No, wasn't cheap. Our archetype was adventure.
Okay.
So then they take that and they're like, okay, we're going to disappear for a week and we're going to present you with 5 names.
Really?
5 names. You don't have to pick one of them. Mm-hmm. You can always say these all suck and we'll go back to the drawing board, but we're going to feel pretty strongly about these 5 that you can't go wrong with any of them.
Okay.
So it's like we're nervous, like we're showing up. I think we were more nervous than they were.
Yeah.
They've got to be. I mean,
it's probably all done over Zoom and shit.
Over
right?
Zoom.
Yeah,
it was the middle of COVID, frankly. So Rascal was the only one. Like the other 4, I get it. They gave us like the meaning behind it. It was a whole presentation. It was well done. And Rascal was the one
that you liked.
Rascal was the one we liked.
Mm-hmm.
But then we stopped and said, the word rascal can mean like mischievous.
Yeah.
And like we're doing mortgages for people, and we already have our business already has a stain on it from 2008.
Mm-hmm.
Like everything should be pure, and buyers should never think twice about that.
Mm-hmm.
So like, we get it. Let us brand it out for you. Like we just got a word. So they put this awesome little cute dog with like a hat on it, with the shape of a house.
Yeah.
Little R in the tail. And they're like, we're going to be like a pet rascal, like goofy, but disobedient, but loyal.
Sure.
All the words.
Mm-hmm.
They wrote all the branding for our site. It's all, I'm trying to think of some of the phrases, a different breed of mortgage. Everything was like dog based.
Sure.
And it was great. The problem is they were like, you are rascal. You're not Rascal Mortgage and you're nothing else. Like, okay, like you guys are the brand experts. We're Rascal. Went to buy rascal.com.
No.
I don't think it was owned by a restaurant that had the word rascal or maybe rascals or something. Actually, no, it was owned by a music like entertainment company, not like Rascal Flats or whatever. We couldn't even find the owner. I think they did for us. They wanted 6 figures.
6 figures for rascal.com.
Yeah.
And if you go there now, there's nothing.
Right. Yeah. It's still not a used site.
Yeah.
No function. We said pass. And then, so I think we could have bought rascal.co or whatever. But then we were playing the game, like picking up the phone, and they really didn't want us to have the word mortgage after it. One of my friends who's in branding a bit or whatever was like, these names are all cool, but like you want a consumer to know exactly what you do in your name.
Yeah.
We're like, okay, great. We're trusting the branding agency, but we were pretending like picking up the phone and be like, Rascal. It's just like, it's not enough.
It's not enough. Yeah.
We couldn't buy the URL, and we couldn't file for the name rights in New York because there was some like restaurant upstate. That's the restaurant thing. So I don't know if David and I, my partner, we went back to them or whatever. We bought Go Rascal as a site. Sorry. So we bought Go Rascal. We're like, all right, that's kind of popular where if you can't own the word, you put like an action item in front of it.
Sure.
And the next thing you know, we kept saying Go Rascal was like it was more syllables. It like rolled off the tongue better. And we went back to them and we're like, hey, can you just like update our site and everything? And we want to, and the banking department in New York was like, your website's Go Rascal, your Go Rascal on your filing papers, but you have on your site just the word Rascal. You're out of compliance. Your company's name is Go Rascal.
Got it.
We're like, great. But it all worked out because just the 2 words, and it was a riff on Go Daddy a little. And I just think I like it better than just rascal. Got it. Especially if we're not saying the word mortgage in it or whatever, or lending. So here we are. It's
do you ever get calls where people are like, what do you do here? Like, they're like, is this a dog?
Get calls.
You get dog.
Like some of the loan officers that we recruit and start, they get used to it. Like anything. You get like, think of all the tech names that are the goofiest things out there that we just say the word and we don't think twice about it. Google,
Apple,
Google. The list goes on and on.
Yeah.
And so loan officers are like, name's interesting. We're like, come on board, talk to us in 90 days. They're like, yeah, it's like no one thinks twice about it. It's fun. It's different. The other strategy with Go Rascal and the tech bend was when we were starting up and we wanted to grow. We wanted to bring on all inexperienced talent, loan officers, fresh, ops, sales, processing, everyone.
Yeah.
We're like, all right, I'm in New York City. There's really sharp talent coming out of college every year, and they all want to go work in the tech space. And so our pitch was, tech space is cool. We've got a cool office too. Most tech companies go belly up. They get venture money. They never turn a profit. And, it doesn't work out, right? Come work in like a cash flow positive business right out of the gate. We're not going to fold our doors. We're going to grow slowly, and we'll have a fun kind of tech startup-y environment. And it worked. We had a lot of kids, a lot of people out of college, and I don't know if like the name actually did it, but it all fit into the kind of the mission and the idea.
That's great.
Yeah.
So that's the whole origin story of Rascal. Go Rascal.
Yep.
Talk to me a little bit about, I think you just referenced something where I've talked about this with other mortgage brokers. Mortgage brokers kind of have a bad rap. They're like car salesmen or, any type of salesman. How often do you have the experience when you're dealing with a new customer, that they're pretty much they pretty much feel like you're ripping them off in some way?
Never.
Never? Really?
Nope.
You don't have that experience?
So I have a personal...
In the beginning, before they get to know you?
Never.
Nothing?
I mean, can I say never?
Yeah.
No, I think, and I'm not trying to sound self-serving at all, but I don't think my voice, my intonation, the way I talk, my vocabulary, I don't think I come off salesy at all, even if I try to. And so I think right out of the gate, I'm like pretty disarming to people. So they just hear a guy talking about products and markets and whatever it is. And whether, a sales coach might say, don't get into the technicals about mortgage-backed securities and the Fed raising rates. Like,
have you
customers
ever had
just want
sales training?
No.
This
I've never had formal
sales
sales
just
training.
Straight up.
Yeah, correct.
Day one, just kind of learning curve for you.
I guess when my first job in the mortgage business, I probably had someone who like listened to me on the phone and helped me out. So if you call it that training, but they weren't they didn't bring in a professional sales trainer.
No, I'm talking like professional sales training or sales
Have
classes. You? No. I'm open to it.
Yeah, I'm not
very
opposed
open
to it. I'm wondering, I mean, is it
I've actually
kind of like a lost breed? I almost feel like it'd be like a funny like 80s sales movie where they're like bringing a sales trainer like Glenn Ross or something.
I have a good friend of mine who just he teaches a sales class at USC about sales.
Wow.
He has a book coming out like in the next, I think it's like next week it's coming out, but his is called The Unsold Mindset. He just gave me a pre-order copy of it and I started reading it. But their method is like, there's all kinds of sales training from, objection trees and like that, all the hardcore stuff, 80s, 90s stuff, the stuff you see in movies. But I think their approach is more, they call it the unsold mindset, where the salesperson's like not really sold, or they're unsold on who they're supposed to be. And they find out that the best salespeople are probably like you, where they're just very authentic as who they are and very comfortable with what they're doing. And they're there to just help, they're there to help the person. And like you said, you're very disarming and people get that. And then,
I think you're the same way too.
I think in some ways, yeah, I don't feel like I couldn't benefit from some sales training because you get all types of clients, but my approach, I try to approach it from more like, listen, I'm here to help you, and I'd like you to understand what the hell we're talking about, because I find most people don't have it. Like they're just the understanding of how mortgages work and where the rates come from and where the fees come. Like nobody really gets it. Like unless you're dealing with a borrower who's done it multiple times, but. I always want the borrower at the end of the transaction to feel like they got some kind of educational experience at the same time. and that they could, if they had to, kind of explain to mortgages how mortgages work to someone else if they had to.
Totally.
And this channel is part of that also, try to help people, peel back the curtain of, like mortgage brokers are actually very important elements to the overall economy, because we help people with usually their biggest purchase of their lives. Are there bad apples out there? Yeah, there's a lot of terrible guys out there and women that just don't have your best interest at heart. But I think what you're looking for is someone like you, who, is just authentic and helpful.
Yeah.
Yeah.
I used to carry the stigma of being in the mortgage business with me to the point where I was embarrassed to tell people I was in the business.
Really?
So from 2004 or whatever until I moved back to New York in 2008, yeah, I'll tell you.
Like
and
somebody would
it's
say,
just
what do
the
you do?
power of the word. Someone said to me once along the way, you went to Cornell, you went to an Ivy League college, and you're a mortgage broker?
Really?
Once. I don't know who it was. Someone not that important to me.
Yeah.
But that one sentence just crushed me.
Really?
And I was insecure about it. I was pre-med in college for a while. I was on a path for that.
I think I knew that. Yeah,
I bailed out, whatever. And I'm very glad I am not a physician. No offense to all you wonderful doctors out there. And it took me moving back to New York post-crash and hanging out with all my friends that worked in finance and then being obsessed with learning about what was happening on the front lines that contributed to the crash.
Got it.
Oh my God, you worked in mortgages. Like, what was that like in 2006 when all the subprimes are, that's not that they were saying it was so cool, but it was so interesting. So they like validated the profession just from a knowledge standpoint, from like a research standpoint.
You're talking post 08.
Post 08.
Got it.
Finance guys who were maybe at the big investment banks that were buying mortgage-backed securities and all the securitizations or whatever, and
lines. The
backstory and the Big Short and all that. I was like, oh my God, like how did you sell these? What were these like? I mean, I did subprime loans, of course, and something flipped there when I moved back to New York. I guess that's what I attribute it to. And from then on, mortgage they came back online 09, 10, HARP loans and everything. From then on, I was never ashamed to just say what I do. It just became part and parcel.
You mean post-crash, what you're saying is post-crash, you were insecure about telling people you did mortgages because there was such a negativity around it? Or?
No, so it's funny. Maybe I don't even think the crash and the embarrassment from the crash. I think it was happening during the good times from 04, 5, 6, 7, a little bit of 8 when things were fine and really like it hadn't crashed and they hadn't said like mortgage broker, scapegoat or whatever. Just during the time when I was just in the biz and things were fine, I was insecure about it.
Interesting.
And it all flipped when, I moved back to New York and I had some of those conversations with some of those Wall Street guys. And the takeaway was really like, those guys were working on Wall Street. To a degree, it was a bit of a more respectable path. Post-college, you go to be an investment banker.
Sure.
It's all sales.
Yeah.
They're just selling other things or,
100%.
Sales and trading on Wall Street. It's just all sales. We're selling a home loan. They're selling other instruments. And it kind of connected the dots for me. And then I was proud. So.
Got it. Do you when I was before the crash, I was working in, and I've talked about this
When did you get into mortgages? Were you doing mortgages pre-crash?
I got into mortgages. I had a bartending company that was running when I was like 27, 28.
Was that same as the events?
Yeah.
Like all
the events. And I was bringing like, I had a company called Beauty in the Bar, and I was bringing like hot models to private parties and stuff, which was mostly just my actor friends at the time. But I kind of started it with a one-page website I learned off of like a, Dreamweaver for Dummies book I got from the library or something. And then I just started, but it kind of turned into a small business and it kind of grew and grew. And then I had like 100 people. And then it was like right around, what was crazy was like 05, 06, 07. There was so much money in the economy from everybody ripping commissions, like that's when the club scene in Hollywood took off. And, it was a big demand for that, but I was meeting friends of mine who, they're like, I made 30 grand this month. And I'm like, what are you talking about? What do you mean you made 30 grand this month? He's like, yeah, I made 30 G's this month. I'm like, doing what? He's like, I was selling mortgages. And I'm like, who do you work for? And he like, he's like, I work for this guy, whatever, in this company. And I was like, give me the number. And I just called the dude up and I was like, hey, I know so-and-so. I'm interested in maybe working. And the guy's like, come down. And I went down there and I had given my resume and he looked at the first thing. He said, you own your own business? Your own small business? I'm like, yeah. He's like, great, go over there, desk 7. And I'm like, wait a second, what do you mean? He's like, yeah, go sit down, desk 7. You can start working today. And I'm like, I don't know how to do mortgages. What do you?
Don't I have to get a license or something?
He's like, no license. No, neither do half the guys over here. Just go sit down. And I sat there. I sit down at this desk, and it looks like, honestly, it's like a scene on a. It's not as crazy as Boiler Room as far as the trading floor, but it has that atmosphere or that there's a couch and a big screen TV and a stripper pole, like rows of guys, and I'm like, what is going on here? And I sit down, and at that time they had incoming leads, and you had a phone window that you had. So there were 3 or 4 guys that were in that hour, and whoever answered the phone first got the lead, and then there was a code number on the postcard, and you would punch this code number into the computer, and it would bring up their address and their loan and like all their information, and then you would just sell them products over the phone like we did, no different. At that time we were selling the option arm, which doesn't.
That's where the 30 Gs came from.
The 30 Gs came from, right? It doesn't even exist. I don't think you can get that product anymore, can you? No.
Someone posted some video on YouTube that they were coming back in a very controlled way. I haven't heard a thing.
I haven't heard a thing about that.
They shouldn't come back.
They shouldn't. There's no reason to have that product.
They serve a very specific purpose for a very specific type of borrower.
They don't. I've seen no reason why they need to be. There are other products.
Good enough.
Yeah, there's other products that serve that market. Anyway, worked there, and I sold mortgages, but I was mostly originating loans for my entertainment friends, and and then they started asking me if I could help them find houses to buy. So I went ahead and got.
So you did mortgages first before.
I did mortgages first, and then I got my real estate license because I was getting requests from my friends being like, because they were calling me saying, I'm looking to buy a house, get a mortgage, and they were like, hey, can you help me find the house? And I was like, I guess I could.
Right.
And then I just got my license, and now obviously I do a ton of that. But
which do you like better?
That's a good question. They're both so different.
Yeah, they are.
They're both so
very
different. Yeah. I mean, there's good days in mortgages, and there's bad days in real estate.
Whichever one is a deal.
Whichever one isn't giving me a problem.
Whichever one is a deal in front of you.
Yeah, every deal has its. I had a closing this morning that we had an issue with. Because the title rep was was adding the fee sheet wrong. Like it was all, yeah.
Do you go to it?
I don't go to the closings. No, I don't. I very rarely go to the closings.
Because they're dry, right?
Yeah, they're dry, and they're I'll call the borrower afterwards and congratulate them, of course, and everything else. But I don't usually go to the closings. But that's a good question. I don't know. It depends on the day, I guess. Yeah. Yeah,
totally.
I like doing what I do like to do is when I have both sides of the transaction. So if a borrower comes to me and I get them a really good mortgage, or they come to me and say, hey, I got a couple quotes, and I'm like, and we just really help them out and get them something way better.
Yeah, that's a good feeling, right? When you pull up the pricing engine, you're like, you got a 6.25 rate. I can't wait to tell them.
Yeah, I can't wait to tell you.
This is a closed deal, and they're going to be like, no way.
Yeah.
Like you said before, like what? There's got to be strings attached here.
Yeah.
Like,
that's the conversation I like when they're like, what's the catch? And I'm like, honestly, there is no catch. This is what it is.
You're like, I'm the catch.
Yes.
Otherwise,
yes. I'm the catch.
Otherwise,
exactly.
There's nothing else.
I feel like, and maybe you can attest this, I feel like you're part therapist sometimes. You have to, I think, like most mortgage people or anybody in finance or who provides a professional service for something that's has a lot of anxiety around or stressful when the borrower's, borrowing $1 million. There's sometimes some anxiety there for them.
Not only that, I think about sometimes just so New York transactions are typically 60 days.
Yeah. They're so long.
We can get the loan clear to close in 3 weeks, and it just doesn't matter. There's seller's attorney, buyer's attorney, bank attorney.
It's the attorneys in New York. Is that the state? So no other state has this attorney.
3 attorneys all have to be at closing.
But
together.
New York is unique like that, where there's an attorney.
There are some
attorneys involved in
Connecticut is an attorney state in the sense that it's an attorney that represents the buyer, but they're also the title rep as well. So it's kind of interesting. But I believe New York's the only state that needs 3 attorneys at closing.
That's insane.
3.
Why do you think that is? Is it just because it's been so litigious for decades there? Or
it's either that or it's like an old man's club kind of thing. Like if they ever try to, like, it's great business for attorneys. So they'll lobby to keep it that way. Same thing with title premiums. I mean, I don't know that space so well, but there's title claims just like don't really exist.
They don't exist. I just my podcast before this, I had my title officer on, and we were talking about
premiums are so small out here compared to New York.
They're very small out here, and they're all mostly the same. We were definitely talking about how different, how it's a competitive business, but the title insurance is regulated by the state, and they can't really. There's only so much they can charge, and they're basically all the same. The difference is they just, it's the service they provide and the branding they have, et cetera, et cetera. But even in Missouri, like out here, when you do a transaction, you'll usually have an escrow company and a title company. In Missouri, you have a title company only. They handle the whole transaction. There's no escrow. Like, if you ask them to open it, there's not even escrows there. Like, they don't exist. But here it's like nobody just uses a title company. They always have an escrow and a title company.
So funny. I think about all the time that we're truly 50 states that are like united because every state does it differently. We're like one big country. It's like you don't know as much because you're only licensed in California, right?
I'm licensed in California and Missouri.
Okay, that's right. That's right, Missouri. Yeah. But like
as a real estate broker and a mortgage broker in both states.
Right.
Yeah.
So when we get audits and when the application to get approved and like the NMLS has kind of helped like sit on top of it. But like it's unbelievable the process in each state. New York, 3 attorneys. New Jersey, 1 attorney or 2. And
because you guys are licensed
other
in
states,
what? How many states are you licensed?
We're in 16 states.
16 states. That's a lot of
backdoor
admin that you have to control.
Totally. Right. Compliance. New Jersey wants this particular disclosure on every loan. Other states don't care. It's too bad because we're all writing mortgages. It's the product's identical.
The money's the same. It's the same money.
Money's the same. Right? Yeah.
It really is bizarre how different it is from place to place.
You just wish they would all come together in a big meeting and agree on some uniform processes and documentation, and it's just it's
nationwide,
vanilla, uniform. It's almost like a federal document.
Yeah.
So
never happening.
No, never happening. Never, not even close.
Do you think it's just the states want to control what happens in their states?
I think so. Right. I think, and like there's
they
politics.
They want oversight of it.
Right. New York, a very consumer protection driven state, all about that. More of a liberal state. So it's like heavy government, big involvement.
What is the worst state? I mean,
New York.
New York is the worst state.
You didn't even ask your question, but it's the worst state. It's the best and worst state.
It's the worst state to get a mortgage in because there's extra fees, right? What's the New York? There's a fee, special fee in New York State. Right?
The mortgage transfer tax in the 5 boroughs can be north of 2% of your loan amount.
That's crazy. Where does that money go?
To the state.
Yeah, does New it York go to State a special transfer fund tax for special services?
No idea. We have a mansion tax over $1 million. Well, that's 1%.
We have that here now.
Here starts at 5.
Starts at $5 million, but it goes into effect like in I think it's April 1st. It's
incredible.
Right here.
5%, right?
4% for anything over $5 million. 5% for anything over $10 million. But that's on top of the additional transfer tax that's already there.
Right.
So if you sell a $5 million house, it's basically
seller's paying it.
The seller's paying it. Well, I don't know. No one's had to pay it yet.
Right.
So
you think they'll start to split it?
I don't know. I'm very curious to see what that looks like because.
I mean, how many deals are going to transact at 499? Like a ton?
A ton.
There's going to be a jump. It's going to be everything's at 499, and then the next thing's going to be like 5.5, where it's like we're not even getting close to the 4s.
Yeah.
Because I'm not trading that way.
I mean,
you're not going to see a
the
5
transfer tax.
$5 million
The transfer tax has always been paid by the seller. Like that's just been standard.
Yep.
In fact, on the purchase contract, it says seller. You have there's a separate line for you to actually make that adjustment to the buyer because everything's negotiable, obviously, but. The idea is that, on a $5 million transaction, the seller is going to have a $250,000 cost. It just in transfer taxes. That's it. I mean, forget about all the rest of the fees. Those just that fee. So you saw a lot of houses jump on the market in the last 6 months in that space, trying to dump before it gets there. And I know several clients are like, I'm taking my house off the market next month. Like, I'm not going to pay that fee, 250 G's. And the buyer, maybe there's a scenario where the buyer does split it with the seller, but I have heard the lender saying they will not allow that to be financeable. Like that
for sure,
$25,000. You can't roll that into.
But if we think about it for a second, Riley, no homes will trade between $5 million and $1 and $5.25 million, right? Because the seller is incentivized. Maybe 525, but like 520. You go for 520, you're really getting 495 as a seller.
Yeah.
You're paying $250,000. So you might as well just go to the buyer and be like, I'll take 499 and I'll get more than I would get if I paid 520. Unless I'm missing some write-offs, some tax benefits or whatever, but I'm looking at it two ways.
I would think you would get a tax write-off for that transfer tax fee. Why wouldn't you? I mean, obviously I'm not an accountant, neither are you, but you would think that would be a cost, right?
Yeah, but like when you have fees on a transaction, you can typically only write off like points. Well, as a buyer, at least I don't.
Yeah, maybe.
I don't think fees on a real estate transaction are tax dedeductible.
Yeah, but it goes against your capital gain on the
sale. Yes, that it should absolutely, which is effectively the same thing. But I look at it two ways.
There's going to be a weird because there's going to be a weird accounting pricing model where don't price your house 4.8 because or 5.25 doesn't make any sense. Like just price it at 4.9, it's the same money.
So I think I'm totally on board with you that it's outrageous, but at the same time, it's only outrageous because of the dollar amount at $5 million is $250,000. If it was 5% on $100,000, we'd say $5,000 and be like, that sucks, but it's $5,000.
Yeah.
But it's still the same percent. The reason I say that is like co-ops in New York, some of them have like what's called a flip tax.
Yeah.
Which the co-op charges, it goes back to the co-op's coffers. And that can be up to 5%. And they're basically saying, hey, as part of this cooperative, we want to share in the profits.
But that's it only if you flip, right?
No. I don't think so. I mean, I've written a lot of co-ops in my career and I haven't paid close attention, but I don't believe it expires after like 2 years. I think they call it a flip tax, but that's just the term for a sales tax.
A sales tax.
And so sometimes it's up to 5%. When I see that now, I don't think twice. It just is what it is. And so I think we'll just end up getting used to it. Yeah. And it feels like a huge number, but you're selling a place for $5 million. 250 is 5%. It does suck, and it goes up to. Oh, it starts at 4 and goes to 5. You said, or
it starts at 4% for anything 5 million and over.
Okay, so 4%. So okay,
yeah, it's 4%. From 5 to 10 million is 4%,
and over 10 it's 5.
And over 10 it's 5%.
So
a commercial real estate deal for 100 million, that's a significant amount of. Now, the money, like you said, you have no idea where that money goes, but this money is earmarked to go into a special fund exclusively to combat homelessness in the whole state.
Right.
Yeah. And there's already several funds that do that. Yeah. So hopefully it helps. Obviously those people need help, and something needs to be done.
The problem is it's going to put such a huge target on those funds to deliver when they haven't successfully delivered.
They haven't. You're right.
I read all the time about some of these projects that are way over budget that they're building. So the intention is pure.
Yes.
But everyone's going to be paying even closer attention because it's like
to the execution.
It's real estate people whose money's taken out of their transaction.
And then Prop 13, which, that's the holy grail in California where they're,
Is that the tax transfer when you're 65?
No, that's Prop 19, where you can transfer your tax basis. Prop 13 is when you purchase your home, your tax basis is locked in for life.
Oh, okay. That's just the rule of how the tax basis works here.
Yeah, here in California, it's a law from the 70s, late 70s or whatever. But it's the holy grail of taxes in California. Like they don't have, in my opinion, they don't have anything else left to tax. Like they tax gas, food, sales, more. Now transfer taxes. Now this extra. Like, there's nothing else to you can't tax anything else. Like what else are you going to tax? But if they could somehow flip Prop 13 where they reassessed everybody's real estate values in the state, I mean, you're talking about, I don't even know what the number would be, trillions of dollars in revenue for the state.
Are they trying?
They tried it recently and
so
it failed.
It just that there's a 2% max. So they would waive that when you get reassessed, your taxes get
your taxes, like I bought my house in 2015.
Right. It's around 1.25%.
Yeah, it's 1.25%, and that's it. It's locked in for life.
I thought it can go up to 2% every year or whatever.
No. Your taxes don't raise. They don't raise. You're locked in at that tax rate. You can be reassessed you can be reassessed if you do one of two things. If you make capital improvements to the property, let's say you add square footage or something, but it's not crazy significant. Like the form, you just fill this form out and they can't raise it millions of dollars. You can only raise it basically on the amount of money that you capitally improve to the property.
Or if you transfer title, right?
If you transfer title. So, well, you're allowed to transfer. And we just had this conversation earlier today, where you can transfer title to a trust. You can, if it's in the name of you and your wife and you transfer, that doesn't generate a reassessment. But if you bring in like your brother or some other third party into the deed and you record a new grant deed on that property, automatically goes to the reassessor for a reassessment. So my title officer was telling me she sees it every single day where somebody calls her to write up a grant deed to add somebody to the deed, like their brother or their sister or their dad or something. They want to add something, and she immediately has to be like, "Do you know what you're doing?"
Yeah,
because they bought this house 30 years ago,
right?
And the tax basis is $1,300, and you're about to
don't screw it up.
Yeah, you're about to have it be $21,000. Like, do you know that? And they're like, "Huh? What are you talking about?" So, that was an interesting conversation around that whole thing. How people just don't know.
I think the takeaway is that this kind of goes back to what you were talking about before about I think you asked me, like, do I ever feel like, or do people ever think I'm trying to rip them off or come off as a salesy guy?
No, I don't think it was that you're trying to rip them off. I was like, do you ever feel like when you meet somebody, they're always slightly hesitant?
Yeah.
Like they're always somewhat skeptical, but then obviously as you talk to them and you like the way you talk and how authentic and real you are, that obviously immediately diffuses the situation, calms them down, lets them know that you're trying to help.
But when you're educated on all of these things, not that your $1.5 million buyer needs to be worried about a $5 million sale, but it's a good conversation, with the growth rates of real estate in these markets. Like, it's only a matter of time before a $2 million home can be worth $5 million. So I'm just pushing the education piece and bringing that stuff up and putting in front of them everything that is applicable to their scenario, and it just it's conversation.
Do you find it interesting how little the typical borrower knows about mortgages and how they work or how the fees work or anything? Like, does that shock you at all? And like, I'm baffled.
Not only does it shocks me
that people don't they just don't have a general understanding at all about how this product works, and it's the most expensive thing they ever buy in their life. Like,
totally.
Like the lack of, I don't want to say it's the lack. I mean, part of me is like, it's the lack of effort on their part to kind of understand this at all. Number one, it's baffling me. It's not a class that they make you take in school. Like, it makes no sense.
Right.
I'm not a conspiracy theorist. I'm not pitching that story, but it's shocking to me how little the understanding of the mortgage is.
Financial literacy.
Yeah, the financial literacy around the mortgage. Like, like how rates are even, like how people don't understand what a par rate is, or or borrower paid versus lender paid. Like, and it's not a lot of, it's like turn Yellowstone off for a night and maybe watch some YouTube videos for 45 minutes and maybe save yourself, $100,000 because
there's plenty of them out there.
For sure. This is just one more. This is just one more of them, right?
This is the best one.
Yes, exactly.
A special one.
Yes, it is.
You'll find others.
But do you get that? I mean, do you find that interesting? How
I find it interesting, but beyond that, I find that it's overly complicated, and so it's not our fault or the borrower's fault that they don't know, because borrower paid, lender paid comp, and explaining all that and par rate and buy down. It's a little too complicated. I mean, listen, what was it, Dodd-Frank or whatever the rules were that came out and changed compensation.
Yeah, that's it.
Tensions were pure. Totally get it. We needed to get away from what happened in the crash, and it was bad. No one was licensed, 100%. But it's hard to execute, and it's hard to explain to borrowers or fees. And they revamped the LE a couple of years ago. Now we're all just used to it. I'm trying to think back to what it used to look like. The 1003, the application
it was a good faith estimate, wasn't it? Wasn't that the big thing everybody was using?
Yeah, but I almost feel, is that when they revamped it, that's when the first thing was called an LE?
It was called a good faith estimate, I think, back in...
Way back. The GFE,
back. Yeah, the GFE.
But the new loan application? It's like Greek even to me. I haven't even studied it super closely. It's like 6 pages now. When I have to go sign my spot on it, I don't even know. I have to so many words on those pages.
like I was in mortgage, when I was in mortgage in 2006, 7, then the crash, I got out of it. I didn't do a ton of mortgages until a couple of years ago. Again, I got back into the business, but
I know, 'cause I was your mortgage broker.
You're right. I would defer all my deals to you. What I found fascinating was from 2007, like in that short, maybe 10-year period, the advancement in the mortgage, I guess the mortgage business, it went from, you're faxing documents to people to online portals, and everything's online and everything's digital and everything's e-signed, everything's streamlined. And I found that, fascinating that they had done that to the business in just a short decade.
Totally.
Yeah.
It took off. And we're so used to it now, but it's pretty crazy that you can, you have 7 business days. A file has to be open for 7 business days, right? You send a file to United Wholesale Mortgage and they CTC it in 4 days. You can't even close it on the 4th day. You have to wait 7 bona fide business days, including Saturday. But it's crazy that you get an appraisal waiver on a deal and say it's a refi or whatever. W-2s, pay stubs, it's file can be clear to close, and title comes in California, it's fast. You open and shut the thing. Spend maybe 90 minutes of work on it. 30 minutes of work on it.
Maybe.
The longest part of the process, in my opinion, is what we keep talking about, which is the education and the upfront conversations with the bar and getting them comfortable with what they have now and what they're getting on a refi and what the marketplace looks like, what the opportunities are going to be.
Sure.
With a rising rate environment, when rates are speculated to go down. That's all the heavy lifting. Once they say this all sounds good and let's go, the process has streamlined itself really well with AI and technology.
Yeah, I think it's going to get even more streamlined and more crazy. As you know, I think we use the same origination program, Arrive. Yeah, and the borrower just fills out a bunch of prompts that they're not filling out a loan application by hand, and it all gets transformed onto that 6-page form, but they don't ever see that except when they sign it electronically, and they're not
when they
reading
sign
it.
Exactly. When they sign electronically, it's an e-signature thing, and they're just taking to their signature spots, and I'm sure some of them scroll through it, but they're not reading. First of all, the fine print isn't anything they have to worry about, but there's so much words, there are so many words on that application, they didn't do a really great job of it. And I think it's
not shocking.
I think a borrower gets to that and they're like, "Oh, this is my loan application," but frankly, I see my information, I see a lot of other stuff on here, and I got to move on. There's 30 more pages for me to e-sign here, and my kids need to go to bed. And
what would you change? I mean, if you had some kind of legislative power in Washington, or consumer finance bureau or something, is there hey, I would change this immediately about this whole process?
Ooh, good question.
Or not? I mean, not change.
I mean, listen, I'm in support of most of these things, but I think the 3-day waiting period after the CD goes out
is unnecessary. Yeah.
Absolutely not.
Yeah.
Borrower is signing a loan estimate at the beginning. The loan estimate has very specific sections that can't go up more than 10% or 0, or there's a tolerance, and we have to cover it out of our pocket. So the old days of kind of the bait and switch game that people used to play, where show them these fees and then they show up at the closing table and they are forced to close because it's closing day, and now they have to just pony up, and it's so shady.
You owe $5,000 more than you thought you did. Yeah,
it's already, the protective measures are already there. The loan estimate box A, where all our fees show up, they can't change anyway without change of circumstance or whatever. So sure, a closing disclosure should go out. Borrower should absolutely, when they e-sign that, they should have the ability to waive their right, not waive their right, waive the waiting period, waive their right to the waiting period. Same thing we do with the appraisal.
Yeah.
Right. When the appraisal requires 3-day wait, unless you say, I've read this appraisal and I sign off on it. I don't need 3 days to read it. Sure. Granted, if you really try to read an appraisal, it will take 3 days for the fine print on how they, score the things. But absolutely, CD, I can't tell you how many deals over the years. So can we close Friday? Unfortunately not. We just got the CD out today, and Monday's the earliest closing date. It's going on vacation Monday. We're fine with this. We're ready. We love the numbers.
Yeah, exactly.
Again, the problem is it's not broken. You and I might think it is, but it's not truly broken. So they're not going to fix it. They're not going to unwind consumer protection.
No. No way.
And that's okay. We've gotten used to it. You're asking me the question. You're forcing me to think about it. But I don't think about it otherwise and sit there every time a CD goes out and be like, 3 more days till this can close.
Sure.
But I think that's overkill for sure. They're getting better with appraisals, with the desktop, the waivers, all that. It's still broken and funky, and
that's a funky side of the business.
It's so funky. I mean, you have a buyer and seller agreeing on a price. Some people think the fact that the appraiser is aware of the sales price is like he should be going out and he or she doing a totally independent appraisal. No way. Like every deal will die. They'll never nail the value. So I'm a fan of that, but it's a broken system and they know it. And Fannie Freddie and technology and the bank, everyone's trying to find like the fix. So it's on its way. We'll keep getting better with that. But it's certainly broken. I don't know. Do you have any thoughts?
I mean,
I think the loan disclosure process is fine. If I had to dig through all those docs, I'd probably say 30% of these are absolutely useless. I get they're part of, they're making the bar aware of certain like big, like federal laws about like discriminatory laws. So sure. Could that all fit on one document, and if you want to read more, click here or whatever. I think so.
I mean, the only thing that comes to mind is I don't think people understand how many human beings touch their file from beginning to end. There might be 30 or 40 people involved in that simple, you just don't see them because you don't know them. You basically only talk to the broker, but I think there's so many people with eyes on it and doing things that it lends itself to a lot of, like today, like this morning, we had a small mistake because, somebody just entered the number wrong in a box and, it slowed the whole process down. So I don't know how you streamline it even more where there's just less, there's less opportunity for error in the number of human beings that have to do this thing.
I know. All the guidelines, all the rules, some of the guidelines are just they don't fix risk on a file, right? The whole goal is to prevent risk of default or whatever. Yes. So the mortgage-backed securities can be bought by investors with faith that
And I say that at the beginning of every loan, I pretty much say that. I said, look, the mortgage business is a risk assessment business.
Correct.
What are the odds that this person is not going to pay us back?
Right.
That's it.
Right.
That's the whole reason why there's an industry.
Yep.
And then obviously the front loaded part of the mortgage, which is if you start going deep into mortgage finance, economics and stuff, where the lenders get the majority of their mortgage in the first 15 years of that deal. So that's why they lend this money in the beginning. That's why there even is a mortgage. I love the kind of the history of mortgages too. When they first came out, like there was only one or two mortgages that were even available. Like now there's a whole myriad of products from interest only to non-QM to hybrid loans to adjustables. Like there's a lot of products, less than there was before the crash. But the old school was like there was no, if you didn't have 20%, you couldn't have a mortgage. It wasn't like, I don't even think it was available to you back in the 50s maybe when they first started that thing. Yeah. So I don't know. There's this, it seems like regulation was absolutely needed, but I think they might have, they tend to do anytime there's a explosion, they overcompensate.
So the mortgage tax, the mansion tax in New York, it's now tiered as well. It used to just be $1 million and above 1%. Now it's at $2 million. I think it's 1.25%. So they're taking advantage of these higher prices. But mortgage tax,
that's coming here.
Yeah. I'm sorry, mansion tax. Tax. The mansion tax
for the under $5 million. They're going to try and do that.
They're going to go lower. But I think it started in the 70s. So $1 million home in New York City or New York State. It's a state law, I believe. $1 million was a freaking mansion.
Yeah, 100%.
So what they should have done is with inflation and everything, moved it every 5 years and said, all right, we're only taxing over 1.5 now in the 80s. And then in the 90s, 2.5 million, because this is truly what a mansion is, or we're just following inflation trend. No, they've kept it $1 million all along.
Yeah.
So now a one-bedroom condo
just more money
is $1 million in New York City, and you're paying a mansion tax, and this isn't a mansion.
Is that a purchase tax?
Purchase. Yep. On purchases. So you got your mortgage tax and a mansion tax. So you buy a $1.5 million place in New York City, you take $1 million loan, you're paying $15,000 plus another 2% on the million, 20, 35,000 on 2 fees before you even blink.
In New York State on $1 million and above.
New York's it's county per county. New York City's close to 2% on the mortgage transfer tax. Long Island drops to only 0.8%. As you push further upstate, it'll be like 0.75%, 0.5%. So New York City is.
But the mortgage transfer tax applies to any mortgage, whether it's purchase, refinance, no matter what.
Correct. But you can avoid it on refis by doing something called a CEMA, CEMA. It's an acronym for something. And it's paperwork. It's awful. You talk about a bad experience. So you have to.
It gives you the ability to waive that fee?
It does, because New York State says any new money on a transaction is considered taxable for mortgage transfer tax. If on a refinance, you go to, let's say you took your loan with Chase and you come to me for a refi.
Mm-hmm.
If you go to Chase and we assign your note and your original paperwork and your remaining balance, even though that money isn't really being assigned over, if we assign that over to the new lender, it's not looked at as new money.
Oh, God.
So if you come to me and you're like, I owe $500,000, I'm going to borrow $510 for the closing costs. You won't pay mortgage tax on the $500. You'll just pay it on the $10,000. So you'll pay $1,800.
But you have to get Chase to agree.
So you pay $180. But it's a completely manual process. Chase has to hire a team of attorneys. They don't make any money. They're losing the loan. So they have to agree to participate. They have an attorney department that goes to the vault, pulls out the original note that you signed, right? It's all scanned in places. Original note, package it up. They send to the bank attorney for the new bank that's assisting with a refi. They get the paperwork, review it or whatever, send it back to Chase to sign off on like the transfer. And then we get notified, okay, the CEMA is ready. During COVID, I would have clients reach out to me and say, I got my loan with Wells. There's 6 months to get me a refi. Like, when can you do it? Well, I can probably do it in 2-3 weeks, clear to close. But you're probably going to want to do a CEMA. You own a $750,000 mortgage in New York City. That's $15,000 give or take in transfer tax. Don't you want to avoid that? Yes, Scott. Okay, sign this authorization. You may have to send like a $750 check because, right? Did I use Wells as an example here or Chase here? Yeah. Because Wells' attorney, they want to get paid no matter what while they're going to the vault.
They've got a 1% fee.
They want to they want to get paid now up front, whether you move forward with the refi or not. And they have to go to the vault. And by the way, these are taking about 10 to 12 weeks. What? Yeah. So can I lock my rate, Scott? No. I don't have a 12-week rate. I don't have a 3-month rate lock. We're going to have to wait till we're within 6. We're going to have to wait till the CEMA comes back, or my bank attorney who's helping process it for us gives me kind of clear status that like we're within 4 to 6 weeks of it being wrapped up. I'm literally sitting here during COVID at these all-time low rates with borrowers just being like, is it done yet? Is it done yet? I really want to close. I want to save money. You're dropping my rate 2%. All I do is I reach out to my bank attorney. Any word from Wells? Nothing. We don't really hear from them until a package shows up in our door.
Oh my God.
I mean, you talk about a broken system.
That's pretty broken.
Why does it have to be the original note? Take a scanned copy. Why? Like, come on, New York, change this law. Like, just streamline it. So the paperwork can be done in a week, 2 weeks. Like
are there borrowers that just skip the CEMA? I mean, I imagine they skip.
Outside of New York City, where it drops off to like 0.75%, it often doesn't even make sense to do a CEMA because you're doing a $400,000 refi. I'm sorry, 0.8%. That's $3,200. So I'd be like, all right, well, you're going to have a mortgage tax line item on your CD for $3,200. They're like, well, should I do the CEMA? I'm like, well, you're not saving $3,200 if you do it because Wells Fargo is charging you $1,000 to process the paperwork. And our bank attorney who has to get involved is going to charge an extra $1,500. Yeah. So $3,200 savings, $1,500. So you're saving $1,700. But I'm dropping your rate 2%. Yeah. And so if we close it in 3 weeks, first 3 months, you're missing out on 2.5 months of lower interest. I show them the math, bag the CEMA. And they're like, bag the CEMA. Close me in 3 weeks. I don't want to sit here and wait. And you can't even lock my rate if I do the CEMA. So it totally sucks. Yeah. Refinances in New York, when you have to do a CEMA, Cali, bang out refis in 3 weeks. Yeah. In New York, it can be months. And
but if you got an appraisal waiver, you can close a loan in 12, 14 days.
Totally. And what happens is if you close your loan with Chase, there's a good chance, Chase, Wells, UW, I mean, they sell it off to Nation Star, right? You've heard of Nation, right? Nation Star participates in CEMAs because everyone has to you win some, you lose some, but they have no incentive. Like they're a servicer out in Texas, 14 weeks, 18 weeks, there's no rush.
Yeah. We'll get it to you when we get it to you.
It's so frustrating, but it's a way of life. We're just used to it there.
Wow. And it's not like anybody can, I guess.
You can't rush it. You can't back channel it. The cool thing is, if I originate a loan with New Res, Shell Point owns New Res. Shell Point's the largest non-bank servicer in the country. They typically hold their paper and service it with Shell Point. If I go back to New Res for the refi, a New Res to New Res refi,
you can port over that.
It'll take a month, less than a month. because they'll
for the SEMA.
Yep.
Yeah.
They'll go rush
Because
it.
it's already right. They just
Kind
going
of,
from
yeah,
this box to this box.
Kind of.
Right?
Yep.
Yeah.
Exactly.
Nice.
So yeah.
Interesting.
But this is the point. New York, like I don't think any other states have a mortgage transfer tax like this, and they certainly don't have SEMAs in here. You know, I'll get LOs who refer me deals in New York. Or I'll get an LO who's like, my company's licensed in New York, and I'm licensed in New York somehow, and I'm doing this deal. I'm like, what's a SEMA, Scott? And I'm like, just give me the deal. Like, you will not understand. You won't understand. Like, you'll be like, what? And I've got to wait like 3 months.
What's it stand for again?
Consolidation Extension Modification Agreement.
Ridiculous.
Yeah.
That doesn't sound like a government, some whack government.
Yeah.
acronym.
Why'd you have to talk about names before it?
Yeah.
Just call it like
Rascal would be a good.
Just call it Rascal. Just call it Rascal. That's what it feels like.
That's what it does. That would be funny if the New York State government owned rascal.com.
Then it would be like, wait, so that must be an acronym for what? R, you know.
Yeah. God, who even knows? Let's not do that. I don't know what word I would start with.
Exactly.
Refinance, adjustment, disclosure.
Right.
Or
there you
S.
go.
I don't know. Great. I'll give you the last word. What, give me a story. Maybe give me a mortgage story. It could be a good one or a bad one or something that, give me a story about it. One deal that, I don't know what it maybe, I don't know, just a deal that really, you've obviously originated thousands and thousands of loans, right?
Yep.
Most of the time, you're in it, you have this you're talking to this person every single day. You become almost, really good friends with them, and the deal closes, and then you kind of separate your ways. Obviously, you keep a relationship with them, but maybe talk to me about, is there any loan or file or scenario or something that sticks out in your mind that, you talk about at the campfire or something? Is there any file like that? Or not? I mean, if you don't, no big deal.
No, I mean,
I was hoping. Put you on the spot.
I'm just gonna pretend that this is the answer to your question because I'm not sure you're even asking me. But I
want you to tell me what I want you to do is tell me a really good story about doing some deal you did that has a really good story to it. Like, I don't know, somebody.
Let me see if I can come up with something.
It could be it could be a bad one too. I feel like every file has its own nuances. Like there are no two that are really the same. Just like there's no two borrowers or people the same.
I'm just going to tell you because I don't think I have an answer to that, but I'll say something I think is just a couple like kind of pointers that I think are valuable. So I pride myself on communication, and I'm not even referencing what is delivered in the communication so much as the timeliness of communication. And like what I hammer home to, and it's cliched or whatever, but I hammer home to everyone on my team at every stage. All anyone wants to hear, the referral partner, the real estate agent, the borrower, they just want to hear back from you in a timely manner. So you send an email, and your response to the email and what you need to respond to, you don't know the answer to yet, or it's even not that good. Just write them right back. I mean, don't go out of order. If you're doing time blocks and you're not in your emails, as soon as you get back to your email, write them back right then and be like, that's a great question. Give me till the end of the day to get back to you. You got back to them in an hour. Now you have free 5 hours or whatever. Real estate agents, I've found that terrible people just want you to pick up their phone and answer them. But I found that once the loan is moving along, there's so many stages at which it's natural to call them. And so you do. The appraisal's in, you confirm or whatever. Where things get, I think, lost is in the earlier part of the process when they refer someone to you and they say, can you help this borrower get pre-approved? And you email back and maybe you move the real estate agent to BCC. Not a fan of that. Leave them on there. They mostly always want to be on there and see what you're writing to the borrower or whatever. You have a conversation with the borrower. Go tell the realtor, hey, I spoke to the borrower. You schedule a conversation with the borrower. Hey, Riley, thanks for the referral. Just want to let you know, I touched base with Mary and we're talking tomorrow night at 5:00. I'll give you an update after the call.
Sure.
After the call, go drop Riley a quick email. Great conversation. Yeah. They sound buttoned up. Income assets. Everything sounds great. I don't see any issues with getting them pre-approved. They're sending me docs. Follow up with you. And of course, when you pre-approve them, it makes sense. But those earlier stage things, I think, are clutch. And I guess where I'm getting at this is that I had a borrower we were working with who I think he works for Google. Very, very smart, like numbers driven guy.
Mm-hmm.
And he reached out to me a couple of weeks ago. We locked his rate. We're pretty deep into the process. And he's like, I saw that.
Purchase, right?
Purchase.
Okay.
It's like he's buying in New York, lives in Hawaii, but
Okay.
was being transferred to New York. Actually, I think he was just chilling in Hawaii.
Okay.
He's being transferred to New York from maybe the Bay Area. And he wrote me, he's like, I saw the rates have trended down in the last few weeks. Can I get a better rate? It's like, float downs is costly. I'm not moving the loan. We're deep in the process.
Mm-hmm.
I took a screenshot of the mortgage-backed security screen and the treasury screen on MBS Live, drew a little arrow and said, even though rates have been trending down, we actually locked your rate on a really good day when the 10-year treasury was at like 3.47. And I point, little arrow, it was Jan 9 and it pointed up. And I was like, rates then went up after that. And now they're trending down and they're only at like 3.42. For that 10-year treasury to move your rate in a meaningful way, we need to see the rate drop below the 10-year get below like 3.35. So I'll keep an eye on it and feel free to keep an eye on it as well. He wrote me right back. He's like, that is as clear as day. Totally get it. You know, rates haven't gotten really better for me. They got better for a guy that maybe locked after me. So it's transparent. It wasn't like, all right, I'm going to go get a second opinion because it was the facts. The next day for a hot minute, the 10-year dipped like around 3.0. And then it didn't stay there. I think it closed the day back at like 3.35. I was like, oh, is he going to reach out? And like, it's still not a great spot. After that, moved all the way up 3.5. Now we're at 3.7. And he's totally cool. Never had a second guessed it at all. So I went to his level to articulate what's going on, right? I knew the kind of guy he was. And then he was all buttoned up. I have a closer, Patrick, who's great. It's like, Patrick, did he look at the CD and everything? He's closing tomorrow. Patrick's like, yeah. I sent him an email. I said, hey, Patrick sent you the CD. It's a power of attorney because you're chilling in Hawaii. CC the realtor. I was like, is there anything else before closing tomorrow that you're not sure of or that anything we can do? I haven't always done this in the past. He wrote back, Scott, I'm great. It's been an absolute pleasure working with you guys, right? And so these little things, the communication, like it, maybe other people out there listening to this or you are like, duh, like obsessively touch base with these people around closing because that's when it's all like coming to. We were great with checking in with them constantly, conditions and this, and we'd be like, you're clear to close. Here's our closer, Pat. And we actually, I think our support actually fell off a little compared to what they were used to. And some of them felt like a little lost at closing, even though they got the final CD from Pat. That extra email coming from me, it's like a game changer. I'm going to do it on every email. And sometimes the borrowers will say, yeah, actually, I'm confused about some things on the CD. Even though Pat went over it with them, it takes like a second probe. And this was a perfect example. And the agent saw his email saying it was an absolute pleasure working with you. She referred him to me, guaranteed to get future referrers. She's been like, you made me look good. My client loved the experience. She was on that email where I broke down some of that technical stuff too. And so it's not like a fireside story or like a deal where I saved ashes, but it's obvious, but it's so easy to cut corners and be like, oh, it's CTC. This guy's got to be tight and happy. And I'll call him after it closes.
Yeah. I think what you're touching on, and correct me if I'm wrong, but I think you're talking about, this is, these people are trusting, they put a lot of trust in you to, make sure that you're doing the right thing for them. And just that little extra level of communication, that little extra level of care, and support and touch goes a long way in making them feel comfortable. Warm and fuzzy that you did them right. You did a good job as you do. And I think that sometimes, I say this all the time, like sometimes we forget that, on the other side of this is somebody who's, going to be living in, this is going to be their home where they're going to have their family and their memories and stuff. And like, we forget that this isn't just money and paper and rates and interest. It's, these are people's lives.
Totally. And I mean, especially in New York, like understandably, like this is a marathon for us. Cause like I've been working with this guy for like 75 days now. Cause it takes a while. So it's only natural to like, oh, it's clear to close. Like I can move on to the next one. Like, like it's truly a marathon and you can't take any days off. Especially at, like the last experience they have is what's going to stick with them. Yeah. Right. So they're like, he was amazing. And, but then the last 3 days before closing, I don't really hear from anyone. It's like, no, you can't slack off there. You got to double down and leave that taste in their mouth. And
Sure.
It's easy to do. You just have to be disciplined. You can delegate it too. I don't think I had to do it. My loan officer assistant could have, my loan partner or whatever could have done it just as well. I'm choosing to do it now lately because it feels good, first of all. And it gives me confidence that it's getting done and getting done well. And, business is a little slower now. So I want to strengthen those relationships with realtors and get referrals from this client themselves, and just feels good. So
awesome. Well, look, man, I try to keep these around 45 minutes, but I think we went quite longer than that. Yeah, we did. We're at about an hour and 10, but
whoa.
Really? That's good. Yeah, it didn't seem like it, did it?
No.
Might have been the booze. Well, listen, will you come back? I know you're bi-coastal and you're back and forth quite a bit, but maybe you'll come back again and we'll revisit another topic in the mortgage space and shed a little more knowledge out there.
For sure.
Cheers, buddy.
Cheers. Thanks, Riley.